The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for unusual options activity alerts, advanced trading strategies, cutting-edge education, detailed market updates, and breaking customer activity. It's time for the One Option Show to rule them all. It's time for the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Options Insider Radio Network and our premiere episode of the Option Block. We've been running a few sneak previews for you guys over the past few weeks to give you a taste of what we have in store, and this is now our final official grand opening. And in keeping with the theme of this show so far, we are down a few hosts, but we should hopefully be able to remedy that partway through the show. So yeah, we have an interesting lineup for you today and some interesting stuff. I, of course, am back from my in-depth exploration of the RAT futures market over there in New York City. And I was surprised at how little volume I actually saw. I thought it would be a little more active than it actually was. But wasn't too much going on in the RAT futures over in NYC.
So would you say, are you long or short?
You got to be short rats, just I think inherently. I don't think if you're bullish rats, then that's kind of saying I think that you're bearish on society in general. So you got to be short rats. You got to be short rats just to stay long humanity, I think. So and we are joined today. Actually, John Griegas is on assignment over at Options Express, but we are joined today actually by Rob Kurzakowski. Did I say that right, Rob?
Yes, you did.
So why don't we start off? You give us a quick rundown of your background in the options business and what you do over at Options Express.
Well, I actually came over from the futures world. I started off at Lynn Waldock, basically at the trade desk, working with retail clients. Worked my way up to dealing with more institutional clients. Left that side of the business. Went and did. It was a full service broker for a year, and I came back and now working with not only futures clients, but with index options and just general clients, or retail clients. I'm currently our senior commodity analyst, or one of our two senior commodity analysts, as well as working on the trading desk.
Well, you're a good guy to have then for some of the commodity stuff we're going to throw in for a few minutes. And now with that intro, we're going to dive right into the trading block.
The Trading Block.
And welcome to the Trading Block. And I'm kind of jealous of you guys. While I was off exploring the rats in New York City, you guys had the actually interesting, busy day there on Monday to talk about. And I come back, and of course, we get another one of these quiet, unchanged markets. Right now, I think the S&P is down about 3 points and closed down about 3 points, and the Dow down about 20. So not much really happening today in the excitement front. There was a little bit of news, which the market seemed to kind of shrug off for the most part. Unemployment applications, they fell last week for the fourth time in about 5 weeks, so that's a mildly bullish sign. It shows that layoffs are at least laying back a bit. There were 445,000 unemployment applications last week. That's down from a high of 504,000 back in mid-August. So we're down a bit off the highs, which is good, but even still with that amount of reduction, it still hasn't really dramatically impacted the unemployment rate. We're still hovering around 9.6% in the unemployment rate, which, as anyone knows, that's extremely elevated and hardly a bullish sign for the economy. We also saw some interesting news on the dollar. The dollar dropped to a 15-year low against the yen primarily on worries that the Fed's going to really start buying up more treasuries and kind of devalue the dollar a bit. So that seems to have hit both of those. I know you guys have any comments on that stuff so far?
Well, I'll tell you, when I was watching the futures this morning in the pre-market action, I was thinking we had a little bit of a pop right after the 7:30 Central Time announcements on the initial claims. S&P was actually up about, I think, 9 points at one time in pre-market. So at first it looked like the market wanted to rally, but then once the cash markets open, it seemed to kind of fizzle out. So we had a little it was a great day traders market, I would think, today. Not that I day trade, but you're right. We just kind of, it was an interesting ride today, but in the end, not a lot of action. That's for sure.
That seems to be the way of it with these numbers lately. So everyone gets all worked up in the initial couple of minutes, and then they mull it over, and it just kind of levels out again.
It's good to be a futures trader at that time because you have the 7:30 number come out. The equity markets aren't open yet. You basically get your few trades in, and then once the market opens, it kind of just levels off and is quiet for the rest of the day.
And Rob, I know you're a commodity guy, but Mike, I know you're also a commodity guy, and we have some interesting breaking news. I know we talked a lot about commodities, especially gold and silver here on the market. And now, Tusaw, apparently through your elaborate technical calculations, you are saying that there is a very strong, almost, dare I say, immediate sell signal right now in gold. So why don't you elaborate on that a little bit for us?
Okay, if the regulators don't put me in jail for that one, we'll see what we can do on that. It was kind of, that's kind of tongue in cheek how we're saying that, and that a lot of times they say when the little guy starts to come into the market, that's the time when the bubble's about to pop, and it's kind of a neat feel. My personal opinion on gold is still I'm bullish on it for the long term. I really don't trade it short term all that much. But what happened recently that I think will be a pretty cool thing in time is the CME recently released a E-micro gold contract. So you can actually trade gold at 1/10 the size of what you did in the past with the gold futures contract that's traded on the COMEX. Rob, have you guys gotten any interest in that? Because I think the Monday was the debut of it. Have you guys gotten any interest in that over at Options Express?
Usually we get, whenever the exchanges release a product like the micro, we'll initially get a little bit of a surge in demand for that type of product. But people will get a lot of questions, but people are somewhat hesitant to initially test the waters until there's some liquidity there. So we have gotten some phone calls, but the way that the gold market's been moving lately, a lot of people have been day trading, want to be flat and don't want to wake up to a margin call. So the micro product may be a good way to avoid that situation and let people trade longer term.
Yeah, it's always nice to see them adding contracts that allow people to have a little bit more bite-sized activity in some of these products, because that's always been one of the big holdups on futures contracts for a lot of traditionally retail or equity traders is that they're just too large for the average trader to bite off. And we're going to get into some of that a little bit down the road on the differences between index contracts and regular traditional futures contracts. But it's nice to see these exchanges wising up to the fact that the retail guy and even the institutional guy to a great degree, they like more nuance in their trading and the ability to hedge with a handful of minis instead of one large futures contract is definitely preferable.
Absolutely. It's the futures exchanges adapting to market conditions. When gold was trading at $600 an ounce, a mini gold contract was small enough for the average investor to really trade. Now we're seeing that even the minis move too much for a lot of traders to stomach, so that you have to evolve and you have to release new products.
And unless you guys have anything else on the docket, because it is kind of a slow day, we will dive right into the Odd Block.
The Odd Block.
Welcome to the Odd Block. This is the segment of the show where we break down some of the interesting or unusual activity that we're seeing in the options market. And we're going to start right off with one of these interesting little solar names. There's a lot of interesting activity in the solar realm these days. A lot of these stocks are bouncing all over the place as different regulations and different subsidies are enacted, and different local regulations make these projects less or more desirable. And the first one we're going to talk about today, the first odd block name, is Solar Fund Power Holdings, or SOLF, and they closed around $12.30 today. And we saw some interesting action out there, a lot of bullish activity actually, with the company trading over 17,000 contracts today, with their average daily volume usually hovering around 2,300. So that's a sizable increase on their traditional average daily volume. And pretty much all the contracts, except for 1,500, all of them were calls, pretty much geared on the OCT 12 and OCT 13 strike, where customers bought about 14,000 contracts. So this is some serious buying activity that we're seeing in this solar fund, particularly in October. And what's really interesting about this is that this congregation of activity in the October strikes and October expiration month has thrown the skew completely out of balance. If you look at a chart of the different skews of the different months, and if you actually search for this on Options Insider, you'll find it in the unusual activity section. There is a breakdown there of the skews of the different months. You see the traditional skews for November and the farther off months. When you look at October, it actually has a reverse skew. The skew is actually inclining to the right, showing that there is increasing volatility as the strike price is rising, which is, as anyone who trades options for a living knows, that's the opposite of what you're traditionally going to see in an equity option. And that just shows that there is a lot of opinion that there's going to be a big pop to the upside, or maybe fear of a big pop to the upside in this name before October expiration. And everyone is loading up on the OCT 12 and OCT 13 strikes in anticipation that there's going to be some serious upside moves. And that kind of skew disparity opens up a lot of different trading opportunities. Obviously, in time spreads, you could buy some cheap far-off vol in the November or December contracts and then sell the comparatively expensive October vol and do a nice little time spread there. The only thing you have to watch out for is if this immediate term pop happens before October expiration, that short gamma in October is really going to come back to bite you. Definitely an interesting one to watch if you trade a lot of skew and you want to learn about how skew impacts the market. Now, have you guys had a chance to look at SOLF at all?
I actually used to trade SOLF.
When did you pop in there? We are joined by Mark Sebastian, the ghost from the past. We thought you were dead.
Yeah, no. There are many people that wish I was. But
You gonna expire worthless?
yeah, exactly. So, I used to trade SOLF on the floor, and it was really weird. It would have these huge pops in volatility and then come right back and sell off without much of the stock moving one way or the other. And and you'd get deathly afraid that the stock was about to move, and then nothing would happen. And then sometimes it would start moving for seemingly no reason. And that's kind of what I'm thinking might be here today. I mean, yeah, we've got some big buying of the 13s, but who knows what that actually means.
So this is par for the course then for this one then. Did you see a lot of skew inversion out there when you were trading it?
Yeah, it's a solar company. It's a Chinese company, I believe, right? It's certainly Asian, because only an Asian company would call it Solar Fund Power Holdings.
Yeah, I love the name Solar Fund. That's one of the reasons. That's one of the reasons I picked it. It's just a great name to have in the odd block.
It really is. So
it reminds me of what's that Simpsons episode where he's super happy, fun detergent, or Mr. Sparkle, something like that.
Yeah, exactly. And it's the seizure-causing robot cartoon?
Yeah, that's right.
Yeah, so I think it's pretty par for the course. Mean reversion, not shocking at all. Or inverted skew, not shocking at all. Especially in something like October, where it doesn't take a lot of buying to make that volatility go up a lot, right? I mean, what is the Vega of the October 13 calls? A penny, okay? So if I run the October 13s up, if I run the October 13 calls up a nickel, I've run it up 5 vol points, 10 cents, and now it's 10 points. right there you're basically inverted.
Yeah. It's a pretty light name on a given day anyway, so it isn't too hard to move these numbers a bit.
Exactly. So that's kind of my experience.
It's interesting. I didn't know you were a market maker out there in Solar Fun. Was it pretty fun out there in Solar Fun back in the day?
It was. We actually would go outside to trade it, so that things were.
What if it was raining out? What would you do then?
Well, then we'd say, come back tomorrow. No interest, no order. That's what we would say.
Speaking of going outside, our next name is another outdoor company. This is Royal Caribbean Cruises, or RCL, and they closed down about 1.5% to $32.50. And this is Royal Caribbean Cruises, obviously the cruise line. And they saw some interesting bullish activity this morning. Someone coming in selling a pretty sizable amount, about 6,000 of the NOV 30 puts. And this was pretty early in the day, and they sold them for about 97 cents. And I kept an eye on it, and we didn't see too much activity again beyond that on that strike. So it looks like 6,000 plus was about the total they sold there on the day. And we've seen pretty much a bit of a pop over the last month or so in Royal Caribbean's, up about a quarter, about 25%. So it looks like this trader here is thinking it's going to be a continued bullish run. On the low end, he doesn't mind owning the stock down at 29.03. So this looks like it's a generally moderately bullish play on a name that doesn't have too much volume going on.
Yeah, I think I would agree with that. That you could make a case on the chart for support at 30. And the other thing, they have earnings coming out on November 3rd. So the fact that they're going out to November to possibly get a little bit of extra premium on it with the earnings volatility, so to speak, could definitely help the case there. And if it goes up, great. It's some premium to put in your pocket. But if it goes against you, the person that did the trade is definitely fine owning it at 30 minus the premium. That's for sure.
Well, he could, like you said, have an axe to grind on this. Who knows why this guy is doing it. It's definitely kind of a bullish economy play because, cruises are one of those things that do a lot better when the economy is doing well because they don't have to give these ridiculous discounts. Like if you look at the price of one of these cruises today versus 2007, you think it's higher, lower, or the same?
Probably slashing and burning on those cruises, I'd imagine.
Exactly. So the less they have to do with that, the better. And so any kind of, put sale is not only bullish Royal Caribbean, but bullish the economy, or it could be bearish one of their competitors. I don't know about a lot of the other ones, this stock really no volume in this thing. That's a big order. This guy really wants to own this guy is not afraid to own the stock at $30 is basically what it's saying.
Yeah, that's got to be the takeaway here. This guy knows he's not getting out of this 6,000 lot anytime soon. So he's definitely thinking he's going to own the stock at around 29 or so.
Yeah, well, if you look, wow, which is a gutsy move considering this was a $23 stock or $24 stock a month ago. So that is a gutsy move. But bravo to our friend here.
Hey, Tusaw sees technical support, so he is therefore safe.
Oh, is that right? That's why they call him Technical Tusaw.
There you go. Tusaw's 2 cents say technical support.
Yep.
I guess they could call me worse.
Yeah.
All right, rounding out the odd block today, we have another little interesting one, a tech name, BMC Software, and the ticker is just BMC. Got some takeover / sale chatter driving up this stock. It's up about 7% today, with some correspondingly sizable increase in the options volume. We're looking at about 19 times the average daily volume going up here, and it looks like it's kind of across the board again in all months, all strikes. We saw saw some interesting paper coming in. Looks like it's selling the about 3,700, maybe 4,000 or so by the end of the day of the NOV 37.5 calls. I don't have the price on those off the top of my head, but I think they were around 560, 570 in that range. Mm-hmm. We also saw the Jan 47 half 55 call spread go up 1,000 times. Paper bought that for about $1.30. But you can take your pick here. Really, there's a lot of sizable stuff going up on.
Ton of action.
Yeah.
Up and down. This I mean, who's the likely buyer? Did they talk about that?
No, I haven't seen that. Well, all the reports I saw were kind of vague, surprisingly so. So a lot of them saying the company is announcing it may put itself up for sale. So it sounds like the company wants to put itself in play. I didn't see any sort of concrete names being bandied around.
You know, I want to sell my condo for $100,000. It doesn't mean I'm going to get a huge premium for $100,000 more than I paid for it. Doesn't mean I'm going to get a huge premium for it, right?
Exactly. A lot of this sounds like wishful thinking, but there has been some other bullish news in there recently.
This looks like a great put sale, you know, as opposed to buying the calls. If you really think they're going to get bought out, obviously the volatility got run up today, right? Big run up in the volatility. This is like a great put spread candidate, don't you think? Like sell the 40s or the no 40s and buy the 37.5s. You know, you pick up close to 80, 90 cents. That's a nice sale for something that's $2.50 out of the money and is only 2.5 points wide. That's because all this volatility ran up. And if you can take advantage of these volatility moving upwards and you're bullish, you know, a put sale might actually really make some sense here. What do you guys think?
Yeah, I wouldn't be diving in to load up on premium at these levels, I don't think, particularly when you see 19 times the average daily volume going up.
And that's the whole thing, is you can take advantage of these premiums.
What do you say, Mr. Two Saw 2 cents?
2 saws, 2 cents. Well, yeah, I think, you know, the other way with which you could do it if you wanted to go out to Nove, there's still nothing wrong with doing a call spread, because let's say, for example, we did if you want to continue to be bullish on it, if you did the 42.50, 45 call spread, you can do that for, about $1. Now, it's an out-of-the-money option play technically, but if this thing continues to run, that's a nice little profit that you have for just $1 worth of risk. So I think the joy of spreads is that you can always trade things out and that the premium's there.
You know, I think in addition to 2 cents, I'm going to start calling you Mr. Upside Call Spread, because I think I can count about 10 times now in recent shows where you've come out and recommended upside call spreads. So I'm starting to see a trend there.
What about like a broken wing butterfly, so you're not buying as much premium, but you're still, taking advantage of a lot of upside potential? What do you guys think about something like that?
I like it so long as you're not too right. It's one of the ones to where, in my broken wing butterfly experience, and just to kind of review that for the audience, you're buying, let's just say in this case, one thing that we could do, we could buy the 42.50 call, sell 2 45 calls, and then with that we have a 50-cent credit, and then with that 50-cent credit, instead of selling the 47.50, instead of buying the 47.50 call for the traditional butterfly, we can buy the 50 call to make it a skip strike or a broken wing butterfly. And
yeah. What about the other way around? I was thinking the other way around.
Sell the meat.
Yeah, what I'm saying is let's buy the 42.5s. I love that. Why don't we sell a couple of the 47.5s? And then, it's like, that's what I was thinking. Or buy the 41s, sell the 45s, buy the 47s. That's a nice little play where if you set that trade up properly, right? If we set a broken wing butterfly up in that way. 1 second here. I'm going to set up a butterfly here. Oh, they won't let me. Now they'll let me. All right. I'm just going to have to move some stuff around. Give me one moment here. So we buy the 41s, we sell the 45s, and then we buy the 47.5s. You know, you're only paying 98 cents, and even if this thing gets bought out for $50, you're making a 50% return.
That's not
what
a
do you think
bad
about
deal.
something like that? And then if the thing pins 45, 46, you can make a blasted killing. What do you think about something like that? What would you call that, Mike? A reverse broken wing or a bull broken wing?
An inverted, reverse, upside down broken wing fly.
I want to copyright that.
So wait a minute, that was an inverted, reverse, upside down, butterfly spread. So it's an IRUBS.
The IRUB spread. We're inventing new terms here today. I love
the
it.
IRUB spread. I love it.
Can we find that in the glossary of the Go Long book?
Yeah.
Don't know if the
index?
publisher let that one go.
Oh, come on. Don't you want to? Everybody should have something named after themselves. And I think you need to have the iRub butterfly be the iRub spread be, the two-sauce signature.
Well, you thought of that. You thought of that one, so I mean, I got to give you the credit on that one.
Oh, that's true. That's true. Well, we could call it the two Sebs.
The two Sebs. There we go.
So.
All right. So
that?
with that nice little bit of chatter, we will close out the odd block, and we will move right into the spread/express block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and this is the Express block, and this is where, formerly known as the Spread block, but and this is the segment of this show where we discuss some of the interesting stuff going on over at Options Express from a customer viewpoint and kind of what they're seeing and hearing from their customers and their users and what they have their eyes on for this week. So we have Rob in the hot seat this week. So Rob, take it away, sir.
The one thing we've been seeing a lot the last 2 days, and this is kind of surprising considering the beating the stock took yesterday, was CRM, Salesforce. The stock took quite a big hit after Equinix lowered its revenue forecast for the third quarter. It really came out of left field, and a lot of the cloud computing companies, RAX, CRM, Akamai, took a really big hit yesterday. But the put call ratio was at 85 yesterday, which is kind of surprising given the scope of the down move. The stock came down, hit the $100 level, tested the 100-day moving average, and bounced back pretty strongly. So we've been actually seeing customers coming in and selling some put spreads, getting into some bull call spreads while they were cheap. It seemed like a lot of traders were kind of waiting for the stock to break a little bit as a buying opportunity.
So I'm a Salesforce subscriber. Are you saying I should run out now and cancel my subscription before the stock goes down in flames?
No, actually, it's the company's positioned well, and I think that one revenue forecast isn't going to shake things up. I mean, cloud computing is something that a lot of companies are moving toward, and it's even for the mobile phones nowadays. I mean, I catch myself doing that with using like the Dropbox app for Android, where you're putting some files on your home computer instead of having to lug that cable around. You're sending or downloading those files from your home computer, and this is kind of the same thing on a much larger scale. So I think Salesforce is positioned well, and I think a lot of people came in and took advantage of yesterday's sell-off. The stock's relatively flat today. We really didn't see any follow-through selling, and it really bounced back sharply off of yesterday's lows.
Yeah, I'm looking at the numbers here. It looks like it closed right around unchanged at about 104.92. And options volume, it did a sizable amount, about 4 times its average daily volume, almost 50,000 contracts on the day, with a slight bias towards puts, though nothing really indicative there. And looks like a lot of the trades went up mid-market, so no one was loading up on puts or loading up on calls, or vice versa, dumping puts or dumping calls. And I agree with you. I love Dropbox. We use it all the time. In fact, some of the files for this show are sent around via Dropbox.
That's what isn't that where Al Gore said to keep our Social Security in a Dropbox?
It's close. It's close. Lockbox. Close enough.
All right, just making sure.
Way to bring back a reference from 2000.
Yeah,
that's relatively recent for you. Usually your references are mired in the 80s.
Strategery.
Yeah, those are some of the last SNLs I can actually remember.
Well, that's less SNL and more the copious amounts of acid that you did that one night, right?
I think I think the candidates became a lot more boring the last few years. That was a lot of fun, and plus the talent on the show kind of dropped off since those days.
Hey Rob, were Option Express customers? Were they doing anything that kind of caught your attention? What was the feedback you were getting from them regarding CRM?
We saw a lot of bull put spreads come out. The numbers aren't particularly great when you're looking at risk reward, but the 95-100 put spread for October, after the company bounced back, those premiums are still relatively fat yesterday, and some of the premiums been taken out of that spread today, and we're seeing some sporadic call buying. We have a really wide, diverse customer base. So we see a lot, but most of the activity was bullish. This is a stock that's been performing so well, and a lot of people thought that they missed out on the move, and the move sometimes a sell off like yesterday that's really has nothing to do with the company itself. It gives traders an opportunity to almost get a mulligan and get back in the market.
So nobody was trading Tucsaw's, what was it called? The iWups, the broken wing in iRub. None of those going up on the Options Express book?
Well, I don't know. I mean, maybe people were legging into them, but I don't think there's an order form ready for that.
Would that be legging a rub?
That's a substantial leg right there.
Leg rub, wouldn't it? Yeah, I think the stock was unfairly smoked and didn't quite get exactly what it certainly didn't deserve what it took. Neither, in my opinion, did Citrix Systems was a little unfairly just absolutely wrecked. So, there's certainly a good reason to go in and maybe look to do certain types of bull call spreads. I think that's another yet more proof that Options Express has smart traders.
It's a company that has a lot going for the sector in general. I mean, it's kind of a buzzword, the cloud computing, but companies just are running really light right now given the current economic conditions, and they don't want to pay for all those servers and keep all that infrastructure in house. So anything where you can remotely access data and it's secure is a great tool for a lot of companies, especially for companies that are running lean.
Yeah, exactly. And anything else on the old Express book for today there, Rob?
No, we did see some action in BMC today because of the rumors going back to that. Also, other cloud computing companies, we saw some activity in Akamai and Citrix. Rex was one that kind of we saw some stock orders come through, but nothing really on the options side. But those have been stocks that again have been performing so well that these large 8 and 9% drops in the stock value really gave traders an opportunity to hop back in. And it's been a relatively late day because of tomorrow's non-farm payroll number. So a lot of kind of sitting around and waiting for that number to come out, given the fact that the last 2 days the employment numbers were pretty much in line. We really didn't. Yesterday's number, the ADP number, is a little bit worse than expected. Today's initial claims number is a little bit better than expected. So I think the ADP or the non-farm number tomorrow is kind of going to be the tipping point, and probably going to set the market direction for the next couple of days.
Yeah, probably we'll have that a little more on that in around the block. That's going to close out the spread/express block for this week, and we will move straight into the strategy block.
The strategy block.
And welcome to the strategy block. This is where we all sit at the feet of Mike Tusaw and we listen to his sage-like wisdom. Mike, what do you have on the docket for us today?
On the docket today, we're going to go over index options versus futures options. In particular, the SPX versus the S&P E-mini. Before I get into this, one thing that I want to mention, I have traded and will continue to trade both of these products, not only to make sure that I don't tick off either our friends at the Merck or at the CBOE, but I think they're both good products and they have their place in at least my option trading portfolio, but in a lot of people's as well. I think there's pros and cons to both of them, and I think they can both be good in a lot of ways. First off, let's do a comparison of the size of the two of them. There's three underlyings that I like to use in the comparison of this. First off, our friend, the SPX. When you see a quote on the SPX, it is for the S&P 500. It's the cash index, and the approximate size of it is about $115,000 right now. If there were an underlying for the S&P 500, that's approximately what it would be worth for 100 shares of it, so to speak. The S&P E-mini, it's a futures contract, and it's traded at the Merck, and it is a one lot on the S&P E-mini. It's a futures contract, but let's say you were to go long and lose 100% of your money. Hopefully that doesn't happen because that means our market's at zero, but let's just say that it did happen theoretically. The approximate value of it is half of the SPX contract. So with that, doing the math in my head, it's about $57,000 is the size of a one lot in terms of the actual cash value of it. Now, in the world of futures, you can trade on a lot of leverage with that, so the margin requirement is going to be approximately $5,000 to $6,000 initially for it, but the actual size of it, it's close to $60,000. Now, the third underlying that I like to use in this comparison is SPY. This is an ETF. And SPY, if you were to own 100 shares of SPY, that's going to be approximately 1/10 the size of SPX. So with that, if you were to get assigned on SPY, the actual value of 100 shares of the underlying of SPY, it's going to be around a little over $11,600 approximately. So with that, SPY, 100 shares of that, it would be the underlying on SPY option. You're trading approximately $11,000 worth of an underlying. A one lot on the S&P E-mini, you're trading just under $60,000. And a one lot on SPX, the cash contract, that's about $115,000. So in terms of the size, that's how big a one lot is on all three of those. And it's all in relation to the movement of the S&P 500. Now, there's little nuances in terms of the dividends that you need to be aware of with SPY, settlement days in terms of AM settlement on the SPX, and the ways with which the different contracts of the E-mini settle, but that's a little bit beyond today's strategy block, so to speak. In terms of when it's beneficial to trade one or the other, if you're looking to trade a smaller contract, I think obviously the SPY would be the way to go. If you're looking to have 24-hour trading, I think the options on the S&P E-mini futures are, well, they're without a doubt the only way to go because that's the only one that trades 24 hours. right now, if we were to have an atomic bomb drop on the world, on New York City in the financial district, and let's say that the markets were going to tank, there's absolutely nothing I can do right now with options on SPY or SPX. However, with the S&P E-mini, I can buy puts on it. I can do whatever I want. Now, does that mean that I'm going to beat the market because of the fact that I'm savvy enough to be a futures trader? No. There's other futures options traders doing the same thing. But my point is that you at least have some control because of the fact that they trade 24 hours. Now, I guess I should say 23 3/4 hours. They do take a break to reset the computers with it. But the point is that you have round-the-clock abilities on the futures option side of it. Now, the other thing that should be mentioned on the futures option side of it, naked option requirements are much more liberal on the futures option side of it. Now, that, of course, is in comparison to Reg T margin. If you're have less than $100,000 in your account, you're not going to qualify for portfolio margin. Or I'm sorry, less than $100,000 with your broker. Chances are you're not going to qualify for portfolio margin. So if you have a smaller account and are looking to have a better margin ratio, so to speak, and you're looking to trade naked options, then futures options are something to definitely consider. Now, with that, naked options do obviously involve risk, and folks, quite frankly, you better know what you're doing. Naked options can work great month in, month out until they don't. And if you're not ready for that 1 month that they don't, and you run into a gap up or something along, or a gap down, then you can go from being a pretty good trader to a former trader very quickly if you're not careful. So make sure you know what you're doing should you decide to go the naked route. Be quiet, Mark Sebastian, on those naked comments. Now, the other thing.
To the punch.
Now, the other thing with the SPX right now that I think is a unique thing that I like about the SPX, the weekly options. It's a great thing for traders for various strategies. It gives you more choice. Right now, the S&P E-mini, they do have the end of the month options on them, but they're not very liquid as of yet. I think they're going to be a good product once they catch on a little bit more. But at this stage, that's one of the things that I like about the SPX is that there's the weekly choice on the SPX side of it. So with that, hopefully that gives you a little bit of a few ideas as to which one would benefit one or the other either way. Now, in terms of the 24-hour trading, in terms of dividends, like I said, that's kind of beyond the scope of today's strategy block. But nonetheless, I like the choices that are available in both of them. And I also like brokers like Options Express that give you the ability to trade both of them within one account.
You know, I think it's nice and refreshing for our audience to hear someone talk up the benefits of futures options every now and then, because frankly, we're seeing just so many people migrating directly into the ETF options and those types of things instead, and just either forgetting about or not thinking of or just neglecting the futures options side. And as you laid out, there are some substantial benefits to using the futures options, not the least of which is that you have a longer time period in which to play and to make your moves and to adjust positions and hedge if you have to. Of course, on the flip side, you know, SPX, you have more options, pun intended, in with which to hedge your positions. But overall, you know, we see a lot of people coming into the Options Insider, particularly on the retail side, and they just they go straight for the ETF stuff, and they don't even stop to think about futures options. And especially now, you have some brokers, like you mentioned, that have removed that hassle of opening up the additional futures account and some of the other things that used to really keep people away from the futures side. There, I think most listeners really should start taking a second look and maybe mixing and matching their products based on what's more suitable for them. And maybe they use the ETF options here or the index options here, and then on the other side they go for the futures options, because, you know, right now there are a lot of people who are just leaving too many potential weapons out of their arsenal just simply through ignorance or lack of information.
If you're only trading Reg T, you are basically allowing the market to, paint you into a corner. You know, that's the basic problem, is that the way Reg T is set up, if you don't have a margin account, you are stopped from doing things that maybe even have less risk because of the screwy way they assume the trader is. The problem with Reg T is they assume you're not going to close your short. So if you do any type of front month long, back month short trade, you're going to have all kinds of problems with Reg T. With the futures, you just don't have that problem. And I think that's, in my opinion, their probably best use is that they're a far more efficient way to trade back and forth in time spreads.
No doubt about it.
Yeah, and Spider, I've spent one of my life works has been getting people to stop trading the Spider all the time. Now, SPY is fine if you have kind of a bulk rate for trading, but I would go and work with these people that were trading 300 lot Spider condors with these different organizations that didn't have a commission limit or charged a massive per contract fee. So if you have a huge per contract fee, would you rather have them trade 300 Spiders, 60 ES options, or 30 SPX options? There's a reason why you don't hear a lot about certain brokerage firms have a tendency, and I don't mean Options Express when I say this. There are certain brokerage firms out there that do all this hating on the indexes and the commodity options, and part of me wonders why.
Yeah, it's definitely. They all have their, right now, full disclosure, I have clients in all three of the products with which we talked about. And they all have their place, and I couldn't agree with you more. The clients that we have with the higher dollar amounts, then yeah, without a doubt, SPX, I mean, that's one to where when we're trying to hedge a portfolio, if we have someone with a higher dollar amount, the SPX, it's very tough to argue with. And if we have a client with just a smaller amount of money or just maybe a smaller market exposure, then the SPY works well, and that you have the opportunity to scale in, scale out, or just not have the right amount of contracts for it. So I think that all three of them are wonderful products, and just knowing the right time to use the right product, I think, is very important.
Couldn't agree more. More, Mike.
Mixing and matching isn't a bad idea, especially if you leave yourself too exposed on one side of the market. You're trading the GLD, and you haven't had you had kind of a mental lapse, and you're looking at your portfolio at the end of the day. There's a big report coming out tomorrow, and you're loaded up biased on one side of the market. The futures, you have no options to trade overnight, and that report comes out an hour before the market opens. You can trade the gold futures. There are three varieties of gold you can trade. There's actually four now. There's the full size contract, two minis and a micro, as well as the options on the futures.
Absolutely. And the other thing to think about with this on the future side of it is the 60/40 tax treatment that exists. If you were to trade GLD, and let's say that you were to buy it and you sold it over the course of over a year, it's not going to be taxed as a capital gain. It's going to be taxed as a collectible because you're technically buying gold. So I spent a lot of time on hold with the IRS learning that one. So not only should you just be aware of the fact of what the tax treatment is on these things, when you get a chance, maybe learn what I would recommend doing. I'm sure there's some information on the Option Insider website, is learning a little bit more about the 1256 tax treatment, to where when you make money on a futures contract, you're taxed at 60% long-term capital gain and 40% short-term capital gain. So that's huge, and I think that's a huge benefit, not only for hedging a portfolio and how you set it up, but just for the individual trader as well.
Yeah, I think we do have some information on there. Some of it might be buried because it was probably put up a year or two ago, probably back when the whole portfolio margin debate was raging. But we'll see. Maybe we can. People can always come to our site and search for that kind of stuff in the search bar, or we can just resurface it back up to the homepage again, as people can find it. But definitely there is some information regarding all that different stuff, as well as the different nuances and vagaries of portfolio margin up there for you guys to take a look at. And with that, we will close out the strategy block, and we will dive right into Around the Block.
Around the Block.
Welcome to the Around the Block segment, and this is where we discuss what is on the horizon for the market. And today it is pretty much one thing and one thing only, and that is the payroll coming up on tomorrow morning. And I don't imagine anyone is looking much beyond that number right now, because that is what's going to move the market, at least for the early part of the session tomorrow. So, obviously you guys have a lot to say about non-farms. Anything else you guys are looking at? Any interesting earnings on the horizon for tomorrow? I know we just had Alcoa come out today while we were talking, and they're moving. It looks like they were moderately bullish. The stock's up about 30-40 cents in the after hours. Nothing huge. I think they said revenues are up about 15%. So yeah, nothing too super exciting there.
Yeah, there was big bullish buying on. I think there were some people that were hoping that they were going to blow it out of the water, because there had been some massive cheap call buying on like the October 13s, and I think they're going to be kind of disappointed. We had seen kind of this weird like 1x2 strangle trading where they were buying one put and buying two calls, which ends up being about premium neutral. So they were certainly leaning bullish, but I don't think this was the move they were hoping for based on what happened, based on paper flow.
What else are you guys looking at for tomorrow?
Non-farms. That's it. Right? You guys, any? Well, here's the one thing to remember is that it is a long weekend for the bond traders, if I'm not mistaken.
It is. It's
Columbus Day. Yeah.
Oh yeah.
Yes.
That's the holiday they stole from us options guys. If they let the bond guys still have it.
Yeah, no kidding. Well, the bonds, if it's like it's talk like a pirate day, the bond guys take a half day. And that's how that's what they do. They'll take a day off anytime they can get one. And so, yeah, that's the one thing to remember is it's going to be kind of a long weekend. So don't expect a lot of activity on Monday with the bond market closed. And so this Friday, after the market comes out, we're not only going to lose any kind of premium that was built in from non-farms, we're going to lose a chunk of Saturday, Sunday, and maybe even a little bit of Monday as people anticipate a whole lot of nothing after this announcement.
Yeah, so if you're going to be hitting some premium, get it done. I guess you can't really get it done before the number now.
Get it done at 8:32.
Yeah, exactly.
Or do some futures options now.
There we go. There we go. Bringing it all back. That's why we call it Two Saws, 2 cents, because he always knows when to pull it back. But
too good. Too good, Two Saws.
Yeah, but I think that's unless Rob, you have anything else you want to throw in there for what you're looking at or what you're seeing on some of the Express stuff.
No, we're going to see how gold's been on a real big tear lately, as is silver and some of the other commodities. With the Bank of Japan recently, not only cutting rates but participating in a bond buyback program similar to what the Fed's been doing, and with tomorrow's non-farm payroll number, I think the Fed sees other central banks acting very liberally with the amount of liquidity they're providing, and if we have some disappointing numbers tomorrow, we could see another move higher in the precious metals, especially because the Fed has made it a secret that they're going to be more aggressive with their bond buyback program. But the worse the figures come in, the more aggressive they're going to get. And as a result, we can see some of the kind of the G8 country currencies suffer at the expense of commodities and higher yielding currencies like the Canadian dollar, the Australian dollar, the Kiwi dollar. So that's something to watch out for with the non-farm payroll report tomorrow, especially because of the long weekend ahead for the bond traders. The bond market may be a little bit quiet tomorrow, but the commodity markets are certainly kind of gearing up for that market for the number tomorrow.
Well, one of the neat things we can do with the now weekly options is we can actually look at how are they actually pricing tomorrow's move. And the way I'm seeing things right now, after Alcoa, the SPY closed 115.89, but it's now trading 116.06 at 116.07. So basically at the money. And let's not forget that SPY trades till about 4:15 Eastern time. So the 116 straddle on SPY went out $1.17. Okay, so they are predicting basically in the SPX and in the SPY, they're basically predicting a 12-point move. The move is going to be less than 12 points 2/3 of the time tomorrow. So real interesting, if you look at the straddle price, real interesting. They're not really expecting a lot out of this market. So, I don't know how you guys were set up, but, just looking, you could sell the weekly at $1, the weekly overnight at $1.12 basically, or at $1.20, and the regular October is not that much more expensive, $2.50. I mean, that's almost a time spread right there. But to tell you the truth, is that's not that expensive a straddle. $2.50 with 8 days left. I don't think that's that pricey for the SPY. If you consider that the SPY has moved more than $2.50, or the SPY has almost moved $2.50 on several days over the last week, and we're up. Our range this week has been about 113.18 to 116.53. Right there, that's like a $3.40 move. So I don't know. What are your guys' thoughts on that straddle price? Seems a little fishy to me. You think the fix is on? That nothing's gonna happen?
You think they're rigging the 116 straddle out there in SPY?
I'm not saying they're rigging. I'm just not saying they're rigging.
Just because I can.
Yeah, but if you look at non-farms we've had some big moves ahead of them, and we've had some big moves out of them. August was, I'm just looking for August right now. We had a big move off of August non-farms, didn't we? And we had a pretty decent move I'm just looking here. Give me a second. Yeah, August 6th. Yeah, we got a nice little pop off of non-farms on the 6th. It really tanked. We ended up moving 16 points on non-farms in August, and in September, on the 3rd, we ended up moving. Sorry, this is taking me so long. 12 points. Then, that straddle just seems too cheap to me. No, the trade I was looking at as possibly, if you wanted to bet the move, the best play I could come up with was to buy October and sell November as a time spread, and do it. And you'd have to use the ES for that. You'd have to use the commodity options in order to put that type of trade on.
Once again, it all circles back to the futures options, our friends over at the CME will be quite pleased to hear all these references today. We should add a special sponsorship slot just for the CME for this episode.
Good people's over there. Good people.
I was just there this morning, so I think they'll be happy to hear that we actually have some use for their products.
Oh, good. Yeah. Yeah.
Yeah, all right, and with that, we're going to close out this episode of the Option Block, this premiere episode of the Option Block, and look forward to more of these shows on a regular schedule going forward, planning on a regular Monday, Thursday taping for a Tuesday and Friday release. And we're hoping to stick on that schedule. We might have to adjust it a little bit towards the end of next week. But other than that, look forward to these shows coming out every Tuesday and Friday morning. And we'll see you next time on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.